Welcome to Smart Stock Watch. Today is January 8th, 2026, and we're diving into WD-40 Company's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's great to be here to discuss WD-40 Company's latest financial results.
WD-40 Company, known for its iconic maintenance products, has just released its Q1 2026 earnings. Let's explore how they performed this quarter. Revenue and profitability overview. Let's start with the top line. WD-40 Company reported total net sales of $154.4 million, a 1% increase compared to the prior year. John, what are your thoughts on this modest growth?
While the growth is modest, it's important to note that the company's maintenance product sales, which are their primary focus, increased by 2%. The gross margin also improved to 56.2%, up from 54.8% last year, indicating better cost management and pricing strategies.
However, net income decreased by 8% to $17.5 million. What factors contributed to this decline?
The decline in net income is primarily due to increased selling, general, and administrative expenses, which rose by 10%. This increase in expenses offset the gains from higher sales and improved margins.
EPS forecast and analyst expectations. WD-40 Company's adjusted earnings per share came in at $1.28, missing the forecast of $1.36. John, what does this mean for the company and its investors?
This miss on EPS is a concern, especially since it reflects an 8% decline from the previous year. It suggests that while the company is managing its top line and margins well, the bottom line is being pressured by higher operational costs.
How should investors interpret this in terms of future performance?
Investors should keep an eye on how the company manages its expenses moving forward. The reaffirmed guidance for the full year suggests management is confident in a rebound, but execution will be key.
Strategic initiatives and market performance. WD-40 Company has been focusing on strategic initiatives to drive growth. Can you tell us more about their performance in this area?
Absolutely. The company has seen a 2% increase in maintenance product sales, with WD-40 Specialist sales up 18% and e-commerce sales up 22%. These are strong indicators that their strategic focus on expanding product lines and digital channels is paying off.
How do these initiatives align with their long-term growth targets?
These initiatives are crucial for capturing the remaining global growth potential for their flagship products. The company is well-positioned to leverage its brand strength and operational discipline to achieve sustained growth.
Dividend and share repurchase program. WD-40 Company announced an 8% increase in their quarterly dividend to $1.02 per share. What does this signal to investors?
This dividend increase reflects the company's confidence in its future cash flows and commitment to returning capital to shareholders. It's a positive sign of financial health and shareholder value.
They also repurchased $7.8 million worth of shares in Q1. How does this fit into their overall capital allocation strategy?
The share repurchase program, with $21.8 million remaining, is part of their strategy to enhance shareholder value. It indicates management's belief in the company's long-term fundamentals and stock valuation.
Operational efficiencies and future outlook. Despite a decrease in operating income, WD-40 Company has reaffirmed its full-year guidance. What are the key factors driving this confidence?
The company is optimistic about a strong rebound in the second quarter and beyond, driven by upcoming initiatives and solid growth across trade blocs. They see a $1.4 billion opportunity to expand their flagship product sales, which is a significant growth driver.
What should investors watch for in the coming quarters?
Investors should monitor the execution of their strategic initiatives, expense management, and any updates on their guidance. The company's ability to capture growth opportunities will be crucial for future performance.
Key takeaways. In summary, WD-40 Company reported a slight increase in revenue, but faced challenges with earnings this quarter. However, their strategic initiatives and confidence in future growth are promising. John, any final thoughts?
WD-40 Company is navigating through some short-term challenges, but their long-term growth potential and strategic focus are strong. Investors should keep an eye on their execution and market conditions.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on WD-40 Company's performance in the comments below. Until next time.